So I've just got back from messing around during the day, and I know I've made quite a lot of videos, but I can't stress enough, and the reason I'm making these videos is purely to hopefully give someone a heads up to the potential of this method that Too Slow on Forex Factory is kindly promoting, as it were, and tirelessly. It does a far better job than I do. But please, if you do nothing else, check these setups out. Get the indicators, as I've said before many times on previous videos. Get this indicator on your charts. Don't get hung up with all the various levels. The only ones that are important is just this thing here. You could take the indicator off your chart. Let's do that, in fact, and I'll explain what's happening. So this is the low of the start of the day, and this is the high. We could put those on. So whatever happens, the indicator wouldn't allow us to consider taking a trade until we've broken the low of the previous, the opening low of the H1 candle there of that day. It's as simple as that, and we don't consider taking a short until the high has been broken by a new candle. So we could consider shorts at this point here, or once this candle's made, we would go short at the open of the candle and hopefully grab a few pips from that with the stop above there. Once we make a new high, which this didn't appear to, then we can consider shorts again. So this would be a consideration for a short because we've just broken the high. So what you do, you bring your level up there. The minute it breaks, then you can start, you would get a dot up here, the indicator would, and you could start considering lows. And the new candle open would be where you would consider taking the short. Sorry, not consider lows, consider taking the short. And as you can see, this would have gained you from the open 72 to the low 57. There was a 15 pip opportunity there before the spread's taken into account. So, you know, what Too Slow suggests you do is just take 5 pips and then manage the trade from there. So partial profits at 5 and so on and so forth. But as we all know, people become millionaires on just 5 pips. So management of the trade is your concern. Now, as we go on, we've not broken this high, so there have been no sell opportunities from that point. However, as you can see, the low of the H1, today's new low, has not been printed. We had one printed there, and there was possibly a break-even opportunity there. It didn't move up very fast. Bearing in mind this is out of hours anyway. That's 4 o'clock in the UK time, 6 on the broker's chart. So we wouldn't have been looking for a trade here. This one would have been a valid super opportunity on the long, as we've talked about on previous videos, and then we wouldn't get another opportunity until our new low here, because this didn't break the low of that candle, so we wouldn't have had the indicator dot there. We would have on this one, and that would have been a winner. For open to high is 58 to 69. There's 11 pips gross of spread before spread, so a good 5 pip winner there. Then the next indicator low would have been this one here. You could have physically moved your line to the low of that candle, and this candle here I'm talking about, and then when that's broken you would get a dot indicator. You would enter the moment the price drops below and comes back and goes above the high, and that would have given us an open of 49 to the high of 59. So there is a 10 pip opportunity there, perfectly valid opportunity. And then we go on to the next, we put our line on the next low, wait for it to be broken. The indicator would have given us a dot here, and we would have had an opportunity to go long after the open of the new candle. This candle here was broken upwards. You take the trade immediately, you put your stop below the low, and there would have been from open to high on that one, which is the candle, the hour just gone, of 33 to a high of 43, another 10 pip opportunity. So all in all, just on dollar CAD, you've had 4 quality opportunities and no losers in our trading time. Short there, as I said, a long here, a long there, and a long there. So if you don't do anything else, get yourself this indicator and whack it on the charts and just trade them. Take the losers on the chin, learn why you've taken the losers, and learn how to filter them out. UJ was a perfectly good example as well. There were plenty of opportunities there. We could do the same thing. I won't go through the whole chart, but we'll just put the high on there and the low on there. This is the opening hourly candle, and the minute we get a break of the high, that one there, that trade there was a valid opportunity for the shorts. The next one would have been this one, and that would have failed. You can see why, but to all intents and purposes it may, I'm not going to go into the detail, but it may have dropped down there and kept us out of the short trade and then gone up, in which case you wouldn't have entered the trade, because the trade must go up and test the high and then come down. These are 1, 2, 3 trades we're talking about here, not higher open, lower open trades, but don't get too confused about them. Study one or the other and suss that out for yourself, and then study some others. Study the opposite one, the high-low setups. You will understand them. Don't get bogged down with technicalities. It will, as you trade this with the indicator, you will begin to understand what's going on. So here we had a new high formed. It just broke that. Again, it was silly o'clock at 5 o'clock in the morning, so we wouldn't have been trading that one. We could possibly have traded this one at 6 o'clock. In fact, I think I did, and that was a superb entry. You pushed up above the open. This is the new high form, so you would have had your indicator alert telling you to go short if you get the opportunity. It did exactly what it was expected to do, pushed up above the new open and then crashed down. And we can look at the pips, the scoreage on that one, which would have been 07 down to 88, which was 19 pips after before the spread was taken into account. Here another winning example at 9 AM, well 7 AM UK time. New high has been printed, so the indicator, the dot would have been there, and we've got a open 23, low 07, so 16 pips. No new high, got a new high, and then we could have trailed this one down all the way down if that was your management style. So again, 4 or 5 winning pips, winning trades there, and no losing, or 1 losing trade that was out of hours, sorry. So 4 or 5 trades and 1 loser. And then as we got down to the bottom, just as has happened in the dollar CAD scenario, we've hit a massive support here. You can see clearly this is strong support because it's pushed the price above the previous higher high, and then it's come back and bounced off of it again. So and these are not valid. You wouldn't have had an alert here because it's not broken this green low. You wouldn't have had an alert on this one because it didn't break the low. And finally you would have got the alert on this one, and that would have been a valid trade. So that's it, simple as that. Just 2 lines on your charts, and off you go.